I feel investing brain is a different brain, which needs to be sharpened and which becomes better and better with more and more experience, right? Whereas entrepreneurship brain and operator mindset is very, very different, right? FSI
Right.
is a $200 billion revenue pool in the country right now, right? Fintech is probably 5-10% out of it, right? Not even 10%, 5% of it, right? If we are saying that this $200 billion will become $600 billion in 2030, and even if it's a 15% of that comes to fintechs, right? It's actually a good $100 billion revenue pool, right? Financial literacy is absolutely poor in a country like India, right?
True.
Like sometimes even I, like someone like me who's into it, also use my CA's help.
Since you have been like investing in fintech, so like your past couple of funds and now the latest one, fund two, what are the segments that you have found really exciting or something that you feel has a huge potential of growth? Hello and welcome to an exciting new episode of Fintech ki Baat Dil Se. In this episode, we have Mr. Adith Podhar, who is a founding partner at Gemba Capital. Hi Adith, thank you so much for joining us today on one of our newest segments, VC Unfiltered. This is a segment in which we invite prominent VCs across the globe and talk to them about what really excites them in the startup ecosystem, which segments do they invest in, and also pose them fun questions that are submitted by our founder and members of the community to kind of take their view on it. So thank you so much for doing this, and it's a pleasure having you here.
Pleasure meeting you, Shreyas. Thank you so much for having me over.
It's a pleasure. Having said that, right, let's quickly dive into the basics, right? What essentially excited you or inspired you to become a VC, right? There is always a really interesting and fun story when it comes to it. In previous 4 or 5 VC episodes that we have done, there have been people who have been founders and turned VCs after exits. There have been people who have been in corporate their entire life, and once they realize that they wanted to create a larger impact and look at the ecosystem from a holistic level, kind of join the VC to get into the impact investing space and call themselves operator VCs and so on. So, what is your story of getting into this ecosystem?
Yeah. No, I think there are a lot of dots which can be connected in my career, which led me to here. In fact, my first job was to market VC funds and private equity funds. And then I actually started and became an entrepreneur in the QSR space, right?
Okay.
And I ran that business for 4 years. So that's where the operating experience comes in. And then I joined a boutique investment bank. So investment banking is where I actually found love in terms of evaluating companies, analyzing companies, how to make financial models, how do you position the company on the sell side. And once I started liking it, the natural progression for me was to move on the buy side, right, and join a fund. That's when then I joined Motilal Oswal Private Equity Fund. Private equity fund, we were doing classic mid-market growth stage private equity, and I did that for 4.5 years. So that I would say is, as it is part of the alternates on the private equity side, I would probably one of the few people who moved from late stage to very, very early stage, because from Motilal Oswal, I started Gemba Capital in 2018, which does now early stage investing, more VC style investing rather than PE investing. And since then, I've been at it. It's been now good 6 years.
Amazing. So one thing that I really kind of want to understand from your perspective, right, is which side are you on? So there are people, or there's a school of thought rather that essentially dictates that operator VCs have an upper hand because they know what's happening at ground level. They've been there, done that. And then there's a school of thought that says that there are an entire set of people who have studied finance for their entire life, understood evaluating, investing, and all of that, know how to make a portfolio work, and those are better suited. So which side are you on?
Yeah, for me, I can actually be on any side, because I have been an entrepreneur as well. I have been a private equity investor. I've been an investment banker, so I've been on all the sides of a
Right.
transaction, if you see, right? And this Gemba Capital is like a combination of entrepreneurship and investing, right? Like I'm in the business of investing. But if you ask me that question, I feel investing brain is a different brain, which needs to be sharpened and which becomes better and better with more and more experience, right? Whereas entrepreneurship brain and operator mindset is very, very different, right? When I am investing money, I would rather be put on the hat of an investor rather
Right.
than as an entrepreneur or an operator, because entrepreneurs are eternally optimistic people, right?
True.
And you can't be evaluating businesses using that hat. So my answer would be that someone who's been investing all his life is a better probably could be a better investor than someone who's been an operator and then an investor.
Got it. Perfect. I think that makes a lot of sense, right? As you said, and I think this thought hadn't occurred to me earlier, but now that you said it out loud, it really makes a lot of sense that entrepreneurs, I mean, one of the basic qualities of an entrepreneur is being eternally optimistic. That's how we survive the first couple of years and build. But from a VC perspective, that would probably spell disaster if you are continuously optimistic on everything that comes along, right? You
Correct.
need a bit of skepticism in your life.
Absolutely. And see, when you're an operator, you are so much into it. You're going deeper into a particular problem, right? And you're trying to solve that, right? Whereas as a VC, you're supposed to connect the dots. You're supposed to connect into multidisciplinary, biases and your, you kind of do all those things, which is like a lattice work of thoughts, right, which will form for you to decide, right? And you've looked at so many businesses, so many different things working, not working. You have a plethora more of ability to kind of drill down to a particular decision, right? And I think all those things really play a nuanced role when it comes to investing.
Got it. No, perfect. I think that makes a lot of sense. Thank you so much for that. I think that really brings out the contrast in both the school of thoughts. Having said that, kind of let's move on to the next part. Would love to hear about what inspired you to start Gemba Capital and what is it all about? What was the initial hypothesis that you started with, and what kind of excites you now?
Correct. Yeah. So when I was with private equity, we were doing large transactions, right? And beyond a point, those were not exciting enough. Because you're investing in companies where you're not talking about technology or innovation at grassroots levels. You're not talking about product market fit. The founders whom you're talking about are already established founders running businesses worth thousands of crores, right? So it becomes more sometimes a financial transaction, right? Like, hey, why the EBITDA moved from 12.5 to 12.6 last quarter and things like that. So I felt that there is so much happening, excitement happening, and potential in Indian startups, right? And I want to spend the rest of my life in that space, wherein maybe I can see companies grow right from pre-product to probably an IPO, right? That's the dream, to see that journey happen. And with that mindset, I actually moved out from private equity and started Gemba Capital. And Gemba Capital is basically, when we started off, it was doing pre-seed, seed checks. More proprietary capital, me and some of my family capital and friends capital, and we used to put like angel checks, right, in startups. But slowly, even those angel checks which we were doing, I was doing it full time with a lot of passion and a team. We used to write long memos, and then I started realizing that hey, this is something I am not bad at. It took me time to unlearn a lot of things and learn a lot of things. Because how do you evaluate a seed company when I've been evaluating large companies in the past, right? Here there is no data, there is nothing to evaluate, right? The founder quality is very different. Everything is very different, and that could be a separate topic of discussion. So once I think, I started getting that confidence, and started getting transactions, started getting into better and better transactions, up rounds started happening, the founders started talking good about us because we were able to add value in those companies, and a portfolio and a track record started getting built, right? That's when then the eventually thought of starting up our own fund, and now we are on our fund 2, right? And I can probably double click on how the journey has been at Gemba Capital as well.
Perfect. And I think since your fund 0, I was going through a portfolio the other day. You have been prominently investing in fintechs and some really successful names that as well. So, want to understand what has been your kind of hypothesis on being bullish on fintech, and even now I think you have been investing in fintech in your fund too as well. So what has been that your entire view on fintech, be it fund 0, be it fund 1, or now as the developments are coming in, fund 2? What is your current view on fintech? Are you still bullish?
Oh yes, absolutely. See, in India, like out of all the unicorns, 24 unicorns are in fintech, right? And when I say fintech, like it's a subset of financial services, right? BFSI
Right.
is a $200 billion revenue pool in the country right now, right? Fintech is probably 5-10% out of it, and not even 10%, 5% of it, right? If we are saying that this $200 billion will become $600 billion in 2030, and even if it's a 15% of that comes to fintechs, right? It's actually a good $100 billion revenue pool, right? So we're seeing a lot of things which are going to happen in fintech. There is no way that if you are in India, you can ignore fintech, right? Obviously, it comes with its riders, its nuances, which we can dig deeper into as our conversation progresses. But in essence, from a macro level, right, if India were to become a $5 trillion economy, right, it cannot happen without the support of the entire fintech and BFSI, economy. You look at the penetration levels in anything, right? They're just so low, right? In India, there's so much more scope. There's so much more room to grow. And that is an opportunity. It is a large piece of value which will get unlocked, which someone has to ride that wave. I'll just give you some random numbers, like if you look at insurance, right? What insurance premiums would be, 4% of the India's GDP. That's about it. You look at credit cards, 5% of the population of the country only has credit cards, compared to 80-90% in the developed countries. Yeah, you talk about retail participation in public markets, not more than 10%. You talk about mutual fund participation, maybe not more than 15% of the GDP is total mutual fund AUM. That's it, right? And that too is only in the HNI, affluent, and the mass affluent side. Otherwise, the penetration levels are abysmal. So anything you pick up, right? There is a huge market out there. There are like good 150 million people, 200, almost 20 crore people who are earning, good more than 3 lakhs a year in the country now, right? And that's a huge number of people who have not been addressed to. So I'm very bullish on fintech.
No, definitely. No, I think when you put it like that, it almost seems like around 80 to 85% of India, so as to that number, I mean, saying that number to be safe, it could be probably be higher, is still underpenetrated when it comes to financial products.
Absolutely.
And this is going to be something that kind of puts it forward, right?
Absolutely. With disposable income going up, people are going to start investing, and awareness is only going to go up, right? Money is going to go into all asset classes, right? Whether you're doing a push product or a pull product, or taking a loan, or for your business, for your home, or investing somewhere, all this is going to only go up, right? So there is no reason to be not so bullish on fintech.
Definitely, I completely agree with you. But having said that, right, a lot of people kind of put it in a way that in India sometimes fintech is slightly overregulated, a lot more regulatory interventions come in, or there are a lot more guardrails put up. So, what are your thoughts on that as an investor? How do you look at it?
See, in any industry, right, any space, regulations will always follow. They will not be leading it. They'll be, after innovation happens, then the regulation happens, right? So there will always going to be some setbacks and some bolts here and there, right? But what we need to understand is we are still such a strong economy in terms of, there is the scams and all those things are not happening because of our regulators, right? They've kept things in check. In fact, the kind of regulation we have is, I would say, we need to be appreciating that regulation, because it has allowed so many fintech companies to thrive. But at the same time, if you're not following the regulations, right, which is a basic premise of, if you're entering into a financial services business, then you will be reprimanded, right? It's like, if you're driving on a highway, you can't just ignore the signals, right? Definitely. And it is as simple as that, and the fintech founders are aware about it. See, the thing is, all these things, what lately also we've been seeing RBI, doing cease and desist notifications to some NBFCs. See, there are a lot of underlying reasons which probably doesn't even come out in the public, right? Like why this is done, right? RBI would not just randomly come up and think, hey, today we want to piss off this guy or we want to do this.
Right.
If you are not taking, your regulations in spirit following, so taking the regulator very lightly, not responding correctly with what is required on time, if
Right.
you're taking your risk management loosely, if you're taking absolutely undue advantage in terms of pricing and not following the circulars, if you're not looking at grievances correctly of your customers, all these things will obviously you will have to pay for it, right? It will come back to haunt you. So you need to work along with the regulators here. The regulators are very forward looking. IRDA has a sandbox, SEBI has a sandbox, newer business models are heard. You need to talk to them. They're open to kind of listening to you, and then kind of grow together. So I feel it's very important that the regulation is there.
Definitely, I think I completely agree with you. And the beauty is that what I have observed is that most of the times you see that there is always, I mean, there are so many sandboxes available, as you know, as kind of pointed out by you, be it the RBI sandbox, the ADA sandbox, or even SEBI's own sandbox that has recently come out. I think it allows for a room of exploration and experimentation without it having direct effects on the public at the first go, and you kind of get to refine your models as well.
Exactly.
And having said that, currently, since you have been like investing in fintech, so like your past couple of funds and now the latest one, fund 2, what are the segments that you have found really exciting or something that you feel has a huge potential of growth?
Yeah. So I'll tell you about how our investments have also happened. So it'll give you some sense.
Sure.
We invested in InsurTech, right? So we invested in 3 companies in InsurTech, right? One was into group health insurance called Plum, right? Again, a category creator of its time in terms of how they did it and why they did it. We can probably double click on that. Then there was one called SureClaim on the claim management side, which got sold to MediAssist. And then there's one called Verak, which was on the general insurance side, which got sold to Insurance Deco. So we've taken 3 bets on the InsurTech side till now. On the alternative investing side, we are only one of the only few VC funds, actually the only VC fund who has investments in 3 alternative investing platforms. One is Grip Invest, one is Vint Wealth, and the third one is Strata, which is for real estate traction. We are investors in all 3 of them. And then we took bets on the credit side, lending side. So we have a company called Credment, which is into supply chain financing. We have an NBFC investment in a company called Navdhan, which does rural financing to rural small businesses. We have an investment in a company called SBNRI, which is investments for NRIs. So the spectrums which we have chosen is lending, credit, InsurTech, then alternative investing, regular investing, and a couple of infra plays as well. A company is called Inai on the payment side and Pay3. So these are the pockets in which we've invested till now, right? And we've also committed to invest in one company which is doing loan against property. So secured lending, we have 2 companies now. One is a company called Volt Money, which does loan against shares, loan against mutual funds, and the other one is which we've not announced yet, which does loan against property, right? So we've been actively mapping this space and actively investing in fintech space over the last 5-6 years. Where we are very bullish going forward is the phygital model of actually doing offline online combination, a bit more like traditional NBFC types businesses, but with a lot of digital processes and digital tech products in the entire customer journey and the entire business operations, being close to the customer, winning their trust over, maybe in tier 2, tier 3 Bharat, right? And then start, offering them products, right? Start with maybe one product and then maybe some other product, so that is one scheme, overall area thing which we kind of are interested in. Secondly, so housing finance companies and these kind of companies, I think still a lot of room to grow. The other is we are also still very keen on the investment side, right? There's still no one solution. Right? We don't have super app right now. We have stable money for FD, we have grow for something else, we have Zerodha for something else, we have, so I think that it's little challenging in terms of high CAC and things like that. But I still feel there is a lot to be done if you understand your TG well, if you kind of dissect your TG absolutely correctly and build something for them in a very holistic way, connecting your investments and your savings in a very, very advisory manner, right? Not just like a distributor, right?
Right.
So I think that is another area where we are very much bullish on. Long tail of agents, we are very bullish on. Long tail of insurance agents, long tail of housing finance companies, managed DSAs, those are interesting plays. Embedded finance is an interesting play. I can go on and on. Infra APIs, those are something that can be interesting. When it comes to selling to fintech, to financial services companies, cybersecurity, data privacy, fraud management, these are interesting products which can be built.
Right.
SME credit, invoice discounting, like cross-border, you name it, and there is scope there.
True. No, I think this space has been recently, really bubbling up in a lot of these segments, right? Specifically, like you said, cross-border, the super app piece that really stood out to me. Like when someone comes to me and says, "Ki yaar, main super app bana raha hu," I'm like, "Ki yaar, itne sare, why are you making one?" But then when you pointed out that gap, no one is actually doing it in an advisory manner, where it's not just as a distributor, not just as another cross-selling thing, right? But something that needs to be properly sold in an advisory manner. For example, I mean, someone like a Ditto, if they are selling insurance, and in the similar way, if they're able to sell products, other financial investment products, right, on a super app kind of a model, that would be really great.
Absolutely. See, Ditto model is a fantastic model. The only question is we can debate whether it's a VC fundable business or not. But from a customer perspective, I love Ditto, right? Because they are not mis-selling, they are not kind of pushing anything. They're just giving out information. Imagine Ditto for home buying, wherein I'm not looking at, talking to the brokers of the developer. I'm just getting a neutral opinion on kind of which house I should buy. So I'm saying eventually people in India would move to advisory, right? That line will move from distribution to become more advisory, wherein you're not just getting money from commissions from the product manufacturers, but you're actually getting paid from the customer, right? Which right now maybe happens in some wealth outfits wherein they charge the customer, right, to give proper advice. So I think that can happen at a democratized level through use of tech and product at a little lower level, at a mass affluent level as well. The question is again, how much ACVs can you make? How much money can you make out of that particular TG? Because the CACs are very high in digital acquisitions and in fintech. That's the biggest challenge, right? So, but I'm sure there will be unique ways people will come up with something. There will be some wedge, there will be some hacks which will come around this, and whether founders will continue to kind of build something on this for sure.
Perfect. I think this is really eye-opening. What you really spoke about specifically. It also helped me understand one thing is that as the audience or the consumer evolves, right, from someone who's just getting into the decent GDP or decent per capita income kind of thing to a more mass affluent market, then people are willing to pay for that advisory service, that quality advisory services, and start paying for it and get used to that, right?
Yes.
For example, imagine like if you would pay, let's say, $100 a month for a service like good investment service, wherein you are able to identify कि नहीं यार ये महीने ये SIP में डालो, वो महीने वो SIP में डालो, instead of having that money in the same SIP every time, even though that fund might not be doing well anymore.
No, financial literacy is absolutely poor in a country like India, right?
True.
Like sometimes even I, like someone like me who's into it, also use my CA's help on the taxation, right? So just imagine everything is so complicated, right? And imagine someone who's just started to get into a good job, right, and says, hey, every month I can take 10,000 rupees and invest. Now that is first an awareness, right? That invest 10,000 rupees per month. Now, where do I invest? I am clueless. I only going to invest where someone's going to tell me where to do, what my friends are doing, or someone I respect more is going to do. But India, after COVID, one thing is very clear, that India has started to pay for content, pay for OTT, pay for things on the gaming side, they're paying for through micro payments, right? They're gifting digital products. So India is paying, right? And there is no reason why India will not pay for advisory, right? There used to be a time where we used to say that fintech mein paisa banana hai. The only way to make money in fintech is to give out loan, right? But now it's maybe things are changing, right? People are willing to kind of pay if you are giving them that value against it, right? Yeah.
Perfect. Having said that, right, I want to take a step back here and ask you a slightly controversial question, right? So, this is more like a hypothetical scenario. Imagine if you had two equally good founders and companies with solid business models, one in B2B in fintech and one in B2C. Which way would you lean on?
The two parameters are too less to decide which one to go for, but I would say all large outcomes in India is B2C fintech, not so much of B2B fintech. In B2B fintech, there are only three large outcomes: Lentra, Perfios, and maybe M2P now, right?
Yeah.
Besides that, I don't see any much large B2B fintech per se as an outcome, right? When I say credit, it could, even if you're giving credit to an SME, I would put it under as a B2C business as of now, right? I think from a VC perspective, if you're taking a risk return profile adjustment, the outcome could be far, far larger and far quicker if it works well in a B2C business rather than B2B. And especially when you're talking about B2B SaaS kind of a businesses, that's very tough. Like imagine a fintech going and selling something to HDFC Bank or selling something to an insurance company. It's just very, very tough.
Makes sense. I think the sales cycle as well as the revenue flows are too kind of stretched out.
Sales cycles, and then you do your pilots, and then you do your POCs, and then you have your hierarchies, and then you kind of get an approval. It's just too tough to do it. Yeah. And then also, I don't know how big is the market. Like how many like top 50 banks, how many of them will pay you what money and stuff like that. You have to work out all that. Yeah.
No, perfect.
So B2C is the way to go.
Makes sense. So I think that really it really kind of aligns, right? You kind of have a huge potential to scale up. You have almost an infinite number of consumers when you look at B2C. Like if your target segment is wide enough in India, you would have at least 5 to 10 crore overall market that you could reach out to.
Yeah,
optimistically.
Absolutely.
Having said that, right, you briefly touched upon a recent investment that you made, World Money. If you are kind of okay, would want to understand from your end to end, what was the thought process? What got you excited about the business model, and what was the rationale, and like what clicked for you, and how did you kind of go through it?
Yes. So Volt Money, what they do is they give you instant loan against your mutual funds on the spot, right? Okay. And completely digital, right? Now this business, which you call loan against shares, typically LAS, it did exist 3 years back. A lot of wealth guys used to do it. That hey, you're my customer, you have a portfolio, I can on that portfolio give you a loan, right? Say maybe 70% of your portfolio LTV, right? Value of your portfolio. So, but that used to be, I had to lien mark your portfolio, right? Just in case you don't repay, right? So it becomes a secured loan, right? And I can offer it at a lower rate, right? But the lien marking process was physical, right? Because CDSL and NSDL didn't open up APIs for that till then, right? And I think a couple of years back they have made it. It was opened up in terms of digital lien marking was absolutely possible through both the depositories, right? Which then opened up this new market. Now imagine I need 7 lakhs, right? I can either take a 7 lakh rupee loan, right? Which is going to cost me what personal loan could be costing me 18%, 20%, or I could draw on my credit card, which is even more expensive, or I could say that hey, I already have a portfolio of 10 lakhs. Let me lien market. Let me get 7 lakhs immediately on the spot, and whenever I can use it, and whenever I get the money back, I can just repay it, right? And I can now becomes a secured loan because it's backed by securities. So I'm getting this loan at 10.5%, right? Because there is no absolute. So this product can actually eat into a bit of personal loan market as well, right? Because
Definitely.
if someone's aware about all this, right?
Hmm.
So I think that is something which kind of made us invest. That was like the broad thesis that this is a very interesting product. It's a very interesting product for MFDs, mutual fund
Hmm.
distributors, IFAs, because
True.
if I am your client and I come to you, Shreyas, that hey,
Hmm.
Shreyas, मेरा 10 lakh का portfolio है, please sell it off, redeem it, because I need some money for some marriage in my house.
Right.
Shreyas will say that hey, don't sell 10 lakh rupees worth of, you keep that 10 lakh lien with me. I will give you on the spot 7 lakhs, right? So if market's going up or down, your portfolio is intact. It's safeguarding your portfolio also against redemptions. So the AMCs also love it, right? Plus the
Yes.
MFDs and IFS can sell it as a new product. So they get again 1%, 0.5% on that. So it
Right.
becomes a new product. It safeguards your AUM. It makes you give new money. It gives you money as well, because it serves the purpose of the client as well, and the client is happy because it's only at 10.5%. So that's the overall logic why we kind of invested in Volt Money. You know, I think it could start with mutual funds, shares. It could be eventually could be anything after 2 years. Right? You could get a loan against any asset which has a value assigned and has a liquidity. You can probably lien market and get a loan against it, right?
Makes sense. So I think this is really something that could blow up if, and I think there's a lot of need for it in the segment, specifically in the mass and mass affluent people who are just begin investing, and
Yeah,
then they end up kind of redeeming because घर पे जरूरत पड़ गई, कोई बीमार हो गया, or whatever reason, right?
correct.
So instead of that, that would also keep the capital in the market as well as give them that gap funding for maybe 2-3 months the requirement here.
Exactly. And the thing, the beauty is now it's possible because now it's in the on the spot. If I told you that I would do this after 7 days, then no one's interested. Like 7 दिन बाद loan
Exactly.
मिलेगा. But if I'm telling you that okay, 10 minutes and you're going to get it, right?
Mm-hmm.
So because then it becomes fantastic. Earlier this product was used for IPO funding for HNIs.
Acha.
So for HNIs for applying to IPOs they used to take loan, right? Again, so I think this actually, but the true need for a product like this is for the mass affluent,
Definitely.
not
No, I
the
think
HNIs. Yeah.
this is brilliant. This is brilliant. I mean, I think I genuinely look forward to see how this kind of scales up and kind of gets adopted
Yeah,
widely.
yeah.
Having said that, right, this brings me to the last kind of question for this specific segment. Uh, just plain simple, right? 3 things that an early stage founder should keep in mind that while they approach a VC or if I were to put it in a different way, what are the 3 things that you would look for in an early stage founder who's come to pitch to you?
See, since we're talking about only fintech, let me just give you from a fintech context, not because it could be different for some other for a consumer tech company or something like that. See, from a fintech perspective, what I would probably look at it is do you have some insights, unique insights on the problem you're trying to solve, or on the market, or on the consumer which you're trying to solve for? Like, do you understand this consumer well, or do you understand this product well, or do you understand this market well? Whatever. So one is the unique insight which you have is something which I do. Have you validated that by doing some basic research, right? Like when I say research, it's not just a secondary research. It's like, have you spoken to 50 people? Have you spoken to 40 people? In a formal way, have you kind of validated that, right? And
Right.
then do you have a wedge, in a way that this is the wedge to get into the market, right? And this is the wedge so that people will download the app, right? That's the most important thing. And then eventually, have you figured out the business model, right? How the economics will play, how the unit economics will play. But I think these are the 2-3 things which people underestimate, right? And they feel that okay, market to bada hai, there is no winner takes all market. Let me just start, and I have the domain expertise, and I'll do it. But it's not about really that, right? In fintech.
Got it. No, I think this is brilliant. Thank you so much for this. I'm pretty sure a lot of our founders will really appreciate this coming from you. Having said that, let's come to the segment that is essentially the namesake of this entire series, the VC Unfiltered piece.
Okay.
This is the part wherein we bring to you questions that were submitted to us by founders from a community and in the ecosystem. And these are questions verbatim as they come from the founder. There are around 4 questions that I have kind of lined up for you. You can be as candid as you want and take a shot at answering this.
Sure.
The first question is, since Indian VCs have a lower risk appetite, the assumption here being that Indian VCs have a lower risk appetite, you could negate that as well. So more founders are approaching global VCs. Is it wise to approach them without having domestic VC in their capital?
See, if you're a founder in fintech, I would suggest a better strategy would be to approach an Indian VC, right? Because they understand the nuances of Indian fintech very, very different from anyone else in the market. We have our fintech ecosystem is much more mature than even US, right? So I think from a fintech perspective, it's honestly not so advisable. But yeah, if you're building something in AI or SaaS for the US markets or global markets, please go ahead, have a global VC. It doesn't really matter whether you have an Indian VC or not. But for fintech, I would recommend to have someone who understands the ups and downs, the regulations, and has invested in a lot of other fintech companies, so knows what is happening, what the mindset is, and what on ground things are. Like for example, if today one of the, let's say a company founder comes to me and says that, hey, my CAC is coming to around 3,000 rupees, right? Is it good, bad, right, wrong? I have an answer. But I don't know whether a global VC would have an answer that, what should your CAC be? So
makes sense. Yeah. Makes sense. Perfect. Moving on to the next one, right? The question goes, on which parameters do VCs visualize the growth of startups in fintech in India?
Come again. On what parameters?
On which parameters do VCs visualize the growth of startups in fintech in India?
See, I think what the question means is that how do you see growth in fintech companies? Right? Like on which parameters they should grow, right?
Right.
Yeah. See, again, that will depend upon what your key KPI is in terms of your business, right? But what you need to be just careful is you are not growing on some vanity metrics, right? The parameter should be that, hey, like for example, if you are, let's say, an NBFC, right? Like it has to be a core parameters that how much is your month-on-month disbursement, and what's the speed of that, what's the quality of the book you're building in terms of your NPA levels, what's your overall AUM quality, what's the ROA, what's the NIM. So the parameters could be different for different businesses, but the only suggestion here is don't get sucked into vanity metrics like money moved through my system, or GTV and gross transaction value of billions, and you are making 0.1% and things like that, right?
True. No, I think I completely agree with this, and given the fact that I have seen, when I was in my earlier avatar working for an early stage accelerator as well as angel fund, we've seen a lot of founders coming to us and say, I move 100 crore rupees through my system every day. And then that sounds really fancy and big, right? But what is your earning out of it? What is your revenue out of it? And that comes out to 0.01%.
Yeah. See, in any business in fintech, right, you're not going to make more than 3%, 4%.
True.
That's the max, 300, 400 bips, right? So it's very, very important that you realize the unit economics and how you're going to make money in this business.
No, so definitely. I think completely agree.
That's also a higher side. I'm just talking about if you're talking about any payment companies or anything else, it's like 1%, 0.5%, 2%, right? Yeah.
True. Yeah. No, I think that really makes sense.
Yeah.
Having said that, right, moving on to the next question, I think we've also discussed this in just some time back, but the question goes, if you were to bet your money on one or two areas of fintech for the next 5 years in India, what would it be?
Very hard, difficult to pick one or two areas, but I would pick A1 is a very boring area, which is housing finance, affordable housing finance, and this area I think is something which is yet to get disrupted by fintechs especially.
True.
And I would also pick investments for mass affluence. That's a large market which is growing also very fast. So people are going to make investments, right? So this is the second area. Co-lending is also something which I'm very, very keen on. So that's the third.
Makes sense. I think I completely agree with you. And specifically, I think what resonates with me the most is the housing finance piece, right? I haven't seen anyone like truly disrupt it yet. We have had DSAs come in, digital DSAs come in, people kind of streamlining the first leg of the journey, wherein file बना के properly arrange करके rule engine लगा के NBFCs को या banks को भेज दी, but no one has been able to kind of get the physical completely out of it or completely disrupt the entire value chain, and that is essentially when I think it will blow up.
It's very tough now because see the banks, you can't compete with the banks when it comes to your rate of interest, right? And no one's going to pay higher, a much delta just for the service and the experience, right? So the delta still has to be a little lower. So I think it's more about which markets can you go, can you start with affordable, but someone has to think from ground up, like how Acco did, right? From day zero, right? Or how Navi is doing now. Something like that has to be done in housing finance, because otherwise the entire process is completely broken. You try to take a home loan and you'll come to know how painful it is, right? Forget home loan, you take a top up of your existing home loan, you will realize how difficult it is. So I think that is something which should be done, and something needs to come up with that. There's one company called Easy Home Finance. They still do it in a much more tech-enabled way, but a lot of the pieces of the entire thing is still not completely digitized. I think a lot of scope there, a lot of scope in credit cards is still completely underpenetrated. So I think that's also one area which we see a lot of action.
Perfect. No, I think that is really helpful. I'm sure. I think I really am looking forward to see someone actually disrupt these segments, right? Specifically the home finance, the investment piece for the mass affluence and segments slightly below that. But looking forward to that. And having said that, right, this brings me to the last question for the day for this segment, which is essentially how do the regulatory changes manipulate the investment decisions in specific industries?
Yeah, so for example, in fintech, it's very, very important. Like for example, if you remember 3 years ago, if you were fintech and an NBFC, people were not looking to invest in you, right? And then the RBI came up with new set of regulations that, hey, you can't do all this, FLDG and this and that, and there were a lot of restrictions. So now it has become the other way around. You have to have an NBFC license, right? And that's now given, right? So now we'll not invest in a company which says that we will not take an NBFC license, we'll still do some form of lending, right? So regulations play a role in terms of investments, right? In terms of how will you do it, when will you do it, but it is not something which unless it is absolutely going against the existing regulations or the spirit of the regulation, it is not something which is a big investment decision criteria. But for example, but some, like for example, bonds and things like that now, right? Like there's so many things coming up in terms of retail participation in bonds, and so you see the trend, you know where the regulator is heading, and then accordingly you can kind of take your decision.
Got it. So there is some preempting that you have to do to understand what the feel of things is.
Yeah, some preempting. Like right now, you know that the unsecured lending is not in favor of the government, because you've messed up a lot of unsecured lending. A lot of companies have done that. So right now, I'll be little hesitant in doing a pure unsecured consumer lending company, right? But at the same time, I know the government wants rural financing. Government wants eventually farmer to get finance or SMEs to get finance. So probably there is something, there could be some good tailwinds there. Similarly, as I said, on the bond side, there is tailwind. People are they're open to kind of new things. So you have to keep that regulatory box always in check while taking decisions.
Got it. I think this makes sense, and it kind of makes sense to also preempt it a bit to understand how are things. As I said, how are things going to pan out, understand which would be the obvious priority sectors for the regulator, and kind of accordingly keep your mindset that way. Great, I think perfect. This has been a really insightful session, Adith. Thank you so much for joining us today.
Thank you so much.
I'm pretty sure our audience will also find this really insightful. There are a few really interesting things that you spoke about, right? Given your views on the kind of upcoming sectors, how do you look at B2C versus B2B, and what would you kind of evolve? Because I think while that is like the conversations that I have had till now with a few VCs, most of them were always inclined on saying we look at B2B in a more bullish way, and obviously they would have their views. But there was always this confusion: there are only so many banks that you can build for, right? There is only always so many players that you can build for, and I think there's a larger opportunity if you build for B2C, but you need to kind of figure out the sustainable piece and all of that. So I think thank you so much for kind of shedding light on that as well, and it was a pleasure having you here.
Thank you so much. Lovely talking to you, Shreyas. Thank you so much.
Likewise. Thank you so much.